First, I'll discuss regarding is it permissible to invest in share or stock market. It is like someone asking me a question, is it permitted for me to eat food? And the simple answer is yes, you can eat food which is halal. You can eat food which is Sharia compliant. Then you can go into the details that, okay, the foods which are prohibited, you should stay away from it. You cannot have alcohol, you cannot have pork, you cannot have animals which have got canine teeth, which are non-vegetarian, and so on and so forth. Amongst the animals which are permitted are the cattle, which are herbivorous, but you should see to it that they are done zabiyah, and there are various rules and regulations. If all the rules and regulations of food is followed, then that food becomes halal or Sharia compliant. If that food is not matching the rules and regulations as laid down by the Quran and Sahih Hadith, then that food becomes haram. Similarly, regarding the question, can you invest in shares or stock market? I will say, if the share or stock market is halal, if it's Sharia compliant, you can invest it. If it's not Sharia compliant, you cannot invest. But naturally, as far as food is concerned, most of the Muslims are aware about the do's and don'ts of the food. So it's easy for a normal Muslim to identify the halal food. And if there are difficulties, mashallah, there are stamps put in different parts of the world, in many of the Muslim countries, the halal mark is there. Now regarding investing in stock, it's the same. You cannot invest in any stock, you can only invest in Sharia compliant stocks or Sharia compliant shares. This field of Islamic finance and the stock market is vast. You can speak on it for hours. I will try and give you in summary brief points how to come to know whether the share is Sharia compliant or not. But it will be difficult for a layman to grasp, but yet I will tell in brief, in short, to the best of my ability. There are basically 5 criteria for any share or for you to invest in any stock for it to be Sharia compliant. Number 1, the core activity or the main activity of that company whose share you are buying should be halal. It should not involve in haram activity. For example, you cannot buy share of an alcohol company. You cannot buy share of a company which is dealing in pork, a company which is dealing in gambling, where the core activity is, for example, having a casino. You cannot invest in share of a company which deals with pornography. So if the core activity is alcohol or dealing with pork or gambling or pornography, it is haram. Or if it is directly or indirectly involved in interest. So you cannot buy share of a conventional bank which is based on interest or riba. You cannot buy shares of company of insurance which are based on riba. So any financial institution which is connected with riba or with interest, it is prohibited. So if the core activity of the company is haram, then you are not allowed to buy shares of that company. If it is not haram, if it is halal, then you pass the first criteria. The second criteria is that besides the core activity, if the other activities of the company, it may not be the major activity, if it is involved in haram, it should not be more than 33%. For example, if the total asset value of the company is $100 million, and if they have put $5 million into a fixed deposit, which gets them interest. So 5 million out of 100 million is 5%. So the scholars, they say that up to 33% it is permitted. If it is less than 1/3, it's permitted. If more than 1/3, more than 33%, in that company you cannot invest, it becomes haram. Now, there are different, this rule I'm mentioning is by Mufti Taqi Usmani. And Mufti Taqi Usmani, alhamdulillah, is from Pakistan. He is one of the greatest person in the field of Islamic finance, as well as Dr. Hamid Hussain Hassan. Dr. Hamid Hussain Hassan, he expired recently, just a few months back. He's also known as the father of Islamic banking, father of Islamic finance. These two persons, mashallah, are the two great personalities as far as Islamic finance and Islamic banking is concerned. So Mufti Taqi Usmani has put that if the haram activity of that company is less than 33%, it is permitted to invest in that. Some have put 30%, some have put lesser, have put 25%. It depends upon your own taqwa. You can keep as low as possible, but most of the scholars said up to 33% accepted. Some which are stricter say it should be less. And when I discussed with Dr. Hamid Hussain Hassan, I said that I want it to be less than 10%. He said, very well, you can do it. Besides this, the earning from that haram investment should not be more than 5% of the gross revenue. For example, out of $100 million, $5 million you have put in the fixed deposit, you are getting interest, but the income is a small percentage, maybe 1% of your total gross revenue. So the income from that haram activity should not be more than 5% of the gross revenue. Then you can invest in that company. So the first criteria is that the basic core activity, the main business of the company should be halal. Number two, that if there are associate activities which are not the main activities, it should be less than 33% of the total investment in the haram activity, and the revenue from that haram should not be more than 5% of your gross revenue. This is the second criteria. The third criteria is that if that company has taken a loan on interest, then they cannot take a loan of more than 33% of their total asset. That means that if they take loan, suppose the company has an asset of $100 million, if they take a loan of $5 million, accepted up to $33 million, it's accepted. If it's more than 33% of the total asset, it's not accepted, and you cannot invest in that company. So the debt ratio, the cash debt ratio to the total asset should be less than 33%. Again, this 33% has been laid down by Mufti Taqi Usmani, and he has said this. But some scholars have put 30%, some have put 25%. When I invest, I see to it that it is less than 10%. I am more stricter. But I'm not saying that someone invest in 20% in a company which has 20% debt ratio to the asset, it is haram. No. It depends on each one's taqwa. The scholars have said up to 33%, that's fine, but I want to be more strict. So third criteria is that the debt ratio, the loan they've taken on interest, if it's a loan given by the partners, by the shareholders, interest free, then that is not called as a debt on interest. It should be based on interest. If it's taken from an Islamic bank which is Sharia compliant, that is accepted. That's not counted as haram, it's counted as halal. The fourth criteria is that the illiquid asset. Illiquid asset means the asset which is not liquid, it's not cash, but it can be converted into cash by selling. For example, property, for example, equipment, for example, goods. So this is called as illiquid asset. The property, the equipment, can be the machinery, can be the furniture. They can be sold. You may not get the exact value, but somewhere close to it, it can be sold. So these are called illiquid asset. According to most of the scholars, the illiquid asset should be more than 50%. Because you cannot have a company which only has 100% cash. I have $100 million, now you invest. So if it's $100 million, it will be at par. You cannot charge more or charge less. If you charge less, that will be called riba. So, for example, if you pay $100 and say that I get a box in which is $120, that's riba. If you're paying $100, you can either get $100 or maybe something else, or box with $100, the box has a value, but you cannot get $120. So And this, if you're investing, most of the scholars say majority, more than 50% should be illiquid asset. Some of the scholars say even 33% is accepted. That means you're investing in a company which has got cash, also illiquid asset. It may be the brand value, or maybe the asset, or maybe the furniture, maybe the property, real estate. According to the Hanafi fiqh, there is no percentage laid down. As long as it's a mixture of illiquid and liquid asset, you can invest. But Mufti Taqi Usmani says it should be minimum 20%. That means the illiquid asset should be minimum 20%. You can't have a company which only has cash. That will be at par value, so you cannot invest in that. It will be same. You cannot give a value less than that. It will be riba. So Mufti Taqi Usmani puts it at 20% minimum should be the illiquid asset. But most of the scholars say it should be more than 50% because there's a general ruling in Sharia that the majority is counted as a whole. So more than 50% are illiquid, you count whole as an illiquid, and that's better to do business in. It's better to buy shares of that. But some scholars put at 33%, Mufti Taqi Usmani has gone down to 20%, but majority scholars say it should be more than 50%. That is the fourth criteria. And the fifth criteria is that the total liquid illiquid asset put together, or the total asset minus the liability, should be less than the market value. Your total asset minus the liability cannot be more than the market capitalization. That will not be permitted. So you have to take out the total value, and the market capitalization that you're doing should be more. It cannot be less. If it's less, it becomes not Sharia compliant. The total value that you have of your liquid asset, of your cash, of your asset, everything put together, minus the liability, what market capitalization you have, it should be less than that. It's accepted. If it's more, it's not accepted. So these basically are the 5 criteria which you look into before buying the share. And if you're not well versed with the finance aspect, it's difficult for a layman to try and find out whether Sharia compliant or not. But if you do research, fine, or best would be to ask a consultant. Fas'alu ahla zikri in kuntum la ta'lamun. If you don't know, ask the person who's knowledgeable. But these are the basic 5 criteria, and you can speak in detail. In each criteria, you can go into detail and find out. So generally, yes, it is permitted for a Muslim to invest in Sharia compliant share if all the 5 criteria which I mentioned, if it follows and agrees with all these 5 criteria. Number 1, the core activity should be halal, it should not be haram, it should not be dealing with alcohol, pork, gambling, pornography, any interest-based company, or bank, interest-based bank, etc. Number 2 is that its other activities, if haram, should be less than 1/3. Lower the better, I would say less than 10%. The profit gained from the haram activity should be less than 5% of the gross revenue. I would say much less the better. Third is that if they take a loan on interest, that company, it should be less than 33%. I would say less than 10%, but 33% is accepted. Number 4 is that the illiquid asset should be more than 51%. The Mufti Zakir Usmani says up to 20%, you can accept that. But if it's more than 51%, it is more than 50%, it is better. And the last is that the total asset value, liquid put together minus the liability, should be less than the market capitalization. If this is accepted, you can invest in that company. But let me tell you one thing. This we are talking about investing in share. Share means there may be 1,000 shareholders or 10,000 shareholders. You are a small shareholder. But if you are a shareholder, it is compulsory that you object to part 2. If in the second criteria, there is some haram activity involved, for example, out of $100 million, $5 million they have invested and kept it in a bank as a fixed deposit. So you as a shareholder should object either in writing or verbally in the annual general meeting. If you don't do, it is haram. Now your share will not have value, that's a different thing. You may be holding 0.001% of the shareholding, or maybe 1%, or maybe 2%, or maybe 5%. You have to object to the haram investment, whether it's 1%, 10%, 5%, number one. Number two, even the haram income that comes, you have to object. But since you are small, they may not follow your objection, but you have done your duty. Number one, object to the haram investment. Number two, object to the haram profit. Number three, when you get your dividend, if you know that the haram activity is 2% of the revenue, gross profit, what do you have to do? You have to purify your dividend and remove 2% as haram activity. There are two types of purification. One is purification only of the dividend, which all the scholars say should be done. Some scholars which are more strict, they say there should be purification even of the principal amount of the share. Means what the share? One is the dividend, you have to purify. Also the main cost, the NAV of the share, if it rises, you bought for maybe $10, now it is $15. So that $15 is because of some haram activity also. I believe that let's be safe, and besides purifying the dividend, you have to try and find out, see the balance sheet, how much is the haram activity, what is the percentage, with the 2%, 3%, 4%, remove that from the dividend percentage. And second, also remove it from the cost of the share. The best way is to try and find out what is the interest rate that the company has when they invest, etc. That rate can safely be said as that portion is purification. And secondly, that you have to even give zakat on the share. There are different opinions how zakat is calculated. The best is you have to see the balance sheet and try and find out which activity zakat has to be given, some doesn't have to be given. So those activities where zakat has to be given, you give zakat on that, you calculate on the balance sheet, others you need not. If it's difficult, scholars even say give 40% zakat. So it's $100 share, say 40% is zakat applicable, so you give 2.5% of $40, so you give $1 per share. So if it's $100 share, average you can take out 40%, so $40, 2.5% of $40 is $1, so $100 share you pay $1. But if you can really calculate and come to know, okay, only 20% of the value of the share is zakatable, that in which you have to pay zakat, pay 20% of $100, it's $20, 2.5% of $20 you can pay. This is regarding investing in share. But let me tell you, this does not mean that if you are running a company, it is permitted for you. These criteria only if you are investing as a Muslim in a company which is not totally Sharia compliant. If you are running a company, okay, core activity should be halal, you have done that. But you say, okay, fine, I will take maybe 10% loan from the bank. You as a Muslim running a company, which is the boss of the company, you cannot even take 0.01%. 0.01% as interest. It's haram. Even taking $1 on interest is haram. So you cannot say that, oh, now while buying shares, 33% debt ratio is allowed. That is because you don't have control over the company. But if you are the boss of the company or you are the major shareholder of the company, in no way can you involve even in 0.001% haram activity. You cannot. You cannot say, okay, income up to 5% is allowed, so I will take income up to 3%, 4%. No. This is for a company which is not Sharia compliant, 100%. And that way you are a small shareholder. This is what the fuqahas have said. That up to 33% allowed, I say up to 10%. Up to 5% haram is there, you take it out and you purify. If you are the boss, you cannot do this. You cannot involve even in 0.1% haram activity, now 0.1% haram income. Neither can you take loan from the bank, which is interest based. Sharia compliant bank, yes you can. So the second and third criteria, when you are running a business yourself, you cannot involve in any haram activity. This is only because you are a small shareholder in a big company. Coming to the question. The first questioner said that can you invest in Tata Ethical Fund. Now, Tata Ethical Fund is a fund which was launched maybe about 15-20 years back. I think it was in somewhere close to 90s, in the late 90s, that's about more than 20 years back. It was a fund launched by the Tata company, which is a Parsi company, and what they did, that they were targeting Muslims and Jains. So they followed the religious principles of Muslims and Jain, and they launched a fund, not very big, it was 25 crores, at that time maybe more than $5 million. They launched the fund, the total value was not very big. And they said they will follow all the principles, and they were careful. And even I invested, but what we did, we personally checked whether the investment was Sharia compliant or not. At that time when I invested, it was Sharia compliant. The negative factor of Tata Ethical Fund was they did not have a Sharia board. Because they are non-Muslim, they may not be aware of the Sharia, and they may think it's Sharia compliant, it may not be. So we as an investor, we used to check ourselves. At that time when I invested, it was Sharia compliant. But investing in such fund which does not have a Sharia board is not very safe, unless you yourself have enough knowledge. So best for a Muslim is that you should invest in a Sharia compliant fund. A Sharia compliant company is one company. Mutual fund, there is a fund manager which invests in various shares of different companies and does not invest in one company only. There's a rule, you cannot invest more than 20% in one company. Some fund have a rule not more than 25% in one company. So they divide the risk, so the chances of loss is less. But if it's a Sharia compliant fund manager, who's a Muslim knowing the Sharia law is the best. But if you go to a non-Sharia compliant like Tata Ethical didn't have a Sharia board. So we requested them that they should have a Sharia board. They said, okay, we will think over it and all, but at that time I don't know what happened after that. But by nature, there are certain UTF fund, Unit Trust of India, mutual fund, by nature they are Sharia compliant. That means the core activity is halal. It may be pharmaceuticals, it's halal. But what then you have to do, you have to see the balance sheet and see to it that the second and third criteria is within your level. The first is passed, core activity is okay, pharmaceutical, it's halal. But see to it that they don't keep too much. You know, sometimes when the market goes up and down, they may keep too much money. So what in this non-Sharia compliant funds, it may be Sharia compliant for one time. If the market fluctuates, the safest thing is, okay, put in the bank. So when they put in the bank, more than 1/3 then becomes non-Sharia compliant. So it is safer to put in a fully mutual fund which has a Sharia board, or invest in a company which has a Sharia board. That is the safest. But otherwise also you can invest in normal companies if you know the nature, or you see the track history, or ask an expert. An expert will tell you, this company, it's a Fortune 100 company, it will not go, it will always be Sharia compliant because of its basic principles. That okay, core activity is halal, it's not interested in loan, and this aspect that you should not take more than 1/3 loan, it is a normal fund manager, this is a thumb rule even for non-Muslims. According to Benjamin Graham, who was one of the best expert investors of the 20th century, his student is Warren Buffett, he said, don't invest in a company which has more than 33% of debt. Means if it has more than 1/3 debt, so this is a normal rule of a finance manager because it's Islamic. So less the debt, more healthy the companies, and most of the top 100 the top companies don't have debt. If they have a small level. So if you're investing in companies which are not Muslim, which are not Sharia compliant, depending upon the base, so you ask an expert and he will tell you that these companies will always remain Sharia compliant, or these companies mostly Sharia compliant but may not become Sharia compliant because of certain activities. If you know this, fine, or best is to invest in a Sharia compliant mutual fund. It is safe, but be careful. There are some Muslims launching Sharia compliant funds and they've cheated the Muslim Ummah, so you have to be careful. You have many in India, I don't want to name them. You have many all over the world. They launch in the name of Islam saying Sharia compliant, and they deceive most of the Muslims. So really you have to see who is the chairman of the Sharia board. If you know the chairman of the Sharia board, is authentic Muslim scholar, no problem. Many of the Islamic mutual fund don't have, they just have namesake Muslim Sharia board, not people who are well reputed, etc. But if you have a well reputed person on the board like Dr. Hamid Hussain Hassan or like Mufti Taqi Usmani, so then you can safely invest in these companies and they will follow the Sharia compliance.